Hi everybody, this is Charles Kim from S&P Global Energy Commodities SC team, and I'm speaking from the Beijing Energy Briefing. The market is going through a significant change, and of course, all the conversation and we're having here are centered around Hormuz situation. What is really unfolding there? So the crossings have been disrupted. So we're talking about a strait where about 135 vessels that usually cross every day that have come down to only around 10 so far this month in June. And then the number of ships that have been stranded there is also has increased quite significantly. Now we have about 180 million barrels of crude oil and refined products that have been stranded there. So when the market is seeing this, this is a very big issue that the market is seeing because Hormuz Strait, this was never disrupted this way before. It had been threatened before, but it hadn't been closed. So this is the first time. So the perception of the industry is shifting quite rapidly. Once it's closed, it could be closed again in the future. So how the market is reacting now is to look for alternative sources of supply. And a lot of them are coming from the US, and also many of them are in the Africa side. So the importance of Atlantic side of region for supply is going to continue to be important going forward. The market really needs to have the confidence to see any meaningful recovery coming into the market in terms of transit count. But we are having many issues because there have been back and forth announcement of the vessels, the peace talk, but then there are reports of missiles going by and retaliation. So that kind of conversation and media reports have been happening since mid-April. So when that happened, the market is losing the confidence. So what we really need is the confidence to come back to the markets, but that is going to take some time. Now, when we are expecting for the normalization to come, we have only one reference point for that question, right? Because that is Bab el-Mandeb. From a perspective of transit of Suez Canal, the Houthis attack happened in 2023 and 2024 and also 2025. The last attack that happened was September 2025. And there was an official announcement from Houthi saying we're not going to attack anymore. And that was November in 2025. And when you see that, right now is June, so 8 to 9 months have passed since the last Houthi attack. But we have still not seen a full recovery of Suez transit count. We have seen perhaps 50 or 60% recovery compared to 2023 baseline. So that kind of tells a story about how cautious the shipping industry looks at in terms of the risk that they have to take in a disrupted area. So the closure of Hormuz Strait is a profound and fundamental change, and that has occurred already in the markets. So companies are shifting their strategy quite rapidly now. So when they have seen this Hormuz situation happen, they would consider also having more buffer going forward because buffer is your first line of defense. And they also want to diversify their sources to other regions. And Atlantic is a great option for them right now. And the last I would say is that the kind of delivery system that they have in place, that system will also change. So in short, the market is moving from a efficiency-driven mechanism to the world of strategy, focusing more on risk management world. And in that world, supply does not move unless logistics does.